Well, hi once again, everyone. It's Vic here again for the final video. Congratulations for going through them all. I commend you for that. And this one's all about trade management. And trade management is how we manage a trade once we're in it. Things like, how and when we move our stop loss to lessen the risk, and when we move our stop to break even, and where we take profits, and things like that. Once you're in a trade, it's just crucial that you manage it properly in order to reduce risk and capture profit. And I'll tell you what, this alone can make a gigantic difference in your account. I've seen people's results turn completely around solely because of learning how to manage trades properly. Okay, it really does make a big difference. Now the thing is that there's no right or wrong answer about how to manage a trade, rather just some sort of general concepts. Nor do I do it totally mechanically, but I thought I'd just give you a few ideas that might be helpful. So let's take a look at a chart and we'll check a few things out here. First of all, on the chart you see in front of you, we're going to make a few assumptions here. Let's say that you saw that we were at potential support right down here. This is on a 4-hour chart of the the New Zealand US dollar pair. And so you saw that we're at support. So you then went to a smaller time frame 15-minute chart to find a nice low risk entry, and we'll just go to that one right now, and that's what we have right here. So here on the 15-minute chart, let's just say hypothetically that we entered because of this. See this positive MACD divergence? See the price is going down, but the MACD is going up. Remember from our MACD divergence video? So let's say that we bought a retracement down here, and we got in down at 69.80. It's around 69.80, okay? And then let's kind of further say that we put our stop below these lows down here, these established lows. And so we had about at 69.60 or so, we had about a 20 pip risk in this trade. Okay. And by the way, we always use a stop, just so you know. Now it gets a little subjective after this, and folks, everybody does it a little differently, but I'm going to show you a few ideas. First of all, you can see that I've marked off the pivots coming into the day here. Okay, this is the 5 p.m. Remember on our video on pivots, they start at 5 p.m. and end at 5 p.m. So this was coming into 5 p.m. We had just gotten into the trade here, and I marked off these pivot levels all throughout the day here coming up. Okay, and you can use these pivot levels to reduce risk and also lock in profit. Also, you should have a profit target in mind at some point. I always know before I get into a trade where my potential is, where I'm looking to get out of it. Okay, so I know what my reward is and I know what my risk is. Typically, we like to use Fibonacci extensions and or a resistance level of some kind. In this case, notice that both the 127% Fibonacci extension, that's this dotted line right here, and the 162% extension, which is this one right here, they matched up quite well with pivots. Okay, so taking profits at the 127% fib right here would give you about a 50 pip profit, and at the 162% fib would give you about a 70 pip profit. So you're looking at anywhere from a 2.5 to 3.5 reward to risk. So that's pretty decent, right? So at first the trade, it doesn't do much. It just sort of, it just really doesn't do anything. It just kind of jumps around here for it. So all you can do is wait. Okay, then we come into this 5 o'clock area, and look what happens. Price starts to get on the move here. And you can see that when the pivots came into effect, that we started to rally up towards this pivots. And now I didn't personally take this trade, but one way to do this, I'll just show you how I've done them in the past, is to wait for price to start breaking pivot levels and then move your stop up accordingly. Okay, or at least to test these pivot levels. You want to start getting risk out. Why? Because pivots are potential resistance, right, as price is moving up. So for example, once price hits the central pivot point, this green line here, then you can move your stop up to the M2 pivot down here, okay, which would be about break even. You'd be at a break even situation then. Okay, so there's one way. You could even move the stop just underneath the swing low here, this little fractal low, the swing low. That's another way that other people like to do it as well. Okay, so like I say, we all do it a little bit differently. Then once price broke above the daily central pivot point, see how it starts to break and hold above here, and starts to trade and hold above it like that, you can move your stop just under the daily central pivot, like just under here, right, further locking in more profit. And if you took your profit to 127% extension, then you'd be out right here. Okay, now if you're going for the second extension here, the 162% extension, it's the same thing. You can trail your stop below the swing lows or fractal lows, like right in here if you like. See these swing lows? These are established low points. And then just ride up further. Okay, now we get the benefit of hindsight on this one, I know that. But the thing is, you need to have a game plan to handle all the different situations. Okay, exactly how you handle this is going to be up to you. And these are just general concepts I'm showing you here. It varies from one trader to the next depending on their overall view, their level of aggressiveness, their the time availability to watch the computer, a whole host of other things. But I hope that this has given you some idea of how to manage a trade once you're in it. It's really a super critical component of a successful trading plan. You really got to have this. So that's about it. Um, I really hope that these videos have been helpful for you. It's been my pleasure for sure to present them to you. And if you have any questions about them, please just let me know. I'd be more than happy to get back to you. Just email me right there, info@forextradingandeducation.com. My name is Vic Noble, and I just want to thank you all once again for listening in, and I wish you all the very, very best in your trading. Alrighty, take care.